So you've lived through, in your 23 years running Himalaya, a number of major financial crises, the Asia crisis in 97, the tech bust in 2000, the financial crisis in 2008, and actually last year, the COVID-19 situation.
Yeah.
Are there specific things you learn about managements or companies that you look for in those crises?
Yeah. Well, so as you said, in my 24 years of managing Himalaya Capital, we have gone through several of those big crises. Each time when that happens, it was billed as once in a century crisis. It probably was, except it happens on a time frame of every 5 to 10 years. So the financial market boom and bust has been a constant phenomenon since the beginning of the financial market several hundred years ago. And it was driven by human nature. As long as human nature remained that way, it will never change. It will always be with us. As a product of evolution, we humans are basically run not necessarily in a very rational way. Now, we're very good at rationalization, but we're really not very good at being rational. So we always are looking for, in a sense, we're governed by some set of hard-coded instincts. And we're looking for a zero sum, and we're looking for fast money, and then you got really totally scared when things goes against you. So that's basic sense of greed and fear would always drive the financial market up and down. Particularly when it comes to money, humans are very funny in a sense. They tend to evoke the primal part of human nature. And so particularly relates to financial market, a security market, money, that human tendency of the extreme instincts become more amplified and more extreme. And that's why the financial market from the very beginning has always been characterized by boom and bust, and will remain so. Now, how do you deal with such an environment that will be constant? Well, one way to deal with that is to anticipate that always on the corner at all times. And that's basically our attitude, that financial crisis will happen all the time. People will always be driven by fear, by euphoria, by this extreme kind of up and downs. And so we're looking for businesses that are capable of living through that. And even businesses that could really thrive in that environment, in a sense, have a certain characteristic of anti-fragile. And so that up and down becomes somewhat friendly for us, in the sense that when our favorite company is on sale, discounted by 50, 60, 70%, if we have money, we'll buy more of it. If we don't have money, it is a hallmark of a good investor. You can sit through and watch your portfolio down by 50% and not being affected at all. On the other hand, other side of the coin is that you're equally unaffected when everybody around you are making fast money, fast and furious, a lot of them. And you're really seemingly totally left behind. And so, and that's really part of the temperament that most people don't have. And that's why not everybody can succeed in this game of investment. And so to succeed in this game, it requires certain temperament and a certain understanding of human nature. Also, a certain commonsensical approach, and knowing that an investment return eventually will mirror the actual business return by actual businesses. And we know in real life, in real businesses don't really change by day, by hour, by week, by months. It took years for them to really either go up or down. And so you should expect your investment result that come in over slowly, gradually over a long period of time. So the short-term phenomena should not really impact you as much, either on the up or on down. And so if you have that basic temperament and basic approaches, what you're going to find is that both the euphoria as well as the crush actually can serve you well. And this is really going back to Ben Graham's basic concept of Mr. Market that is there to serve you, not to instruct you. Except in real game of investment, those phenomena, both on the up and down, tend to be quite extreme and testing. And so the other thing that will be very testing is that you really do need to understand the business itself. And if you really try to pretend you understand, and you're really driven by something else other than deep understanding, you'll be tested. And so that's the salient nature of the financial market. I sometimes almost feel that they exist to catch human weaknesses. That if you really don't understand something that you pretend to, you will be busted at some point. But if you truly understand, you will be able to add when the security really down 50, 60, 70%.